Everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the ETFs. Okay, so the markets are on a two-day bounce for the indices, and so we're looking at a nice bounce here. So with the bounce, these bull ETFs are starting to reverse. Most of them are still in a very strong downtrend, but they are trying to break resistance right now. So I'll show you where they're at in the charts, and so we'll keep an eye on them. If the reversal continues, these could be in play. The inverse ETFs were really strong during the market pullbacks, and they delivered really big gains. And so if the markets do reverse, this would be a place to check out for some potential percentage gains. But if the downtrends fail to reverse, it's going to be a signal the bears are still in control. So first up, let's take a look at Spxl. Okay, this is the S&P 500 bull 3 times, and so what's going on is it's bouncing off of the 200-day simple moving average. That's this red line down here at $38. So the candles work back into the bands, and the bullish development today was the close above the pink line. That was EMA 4, currently at 42.18. Okay, so that's the first close above that level since this drop started on the close below on the 30th, below the pink line. And so the big level to break is going to be this gold line, the 100-day simple moving average at 42.60. So above 42.60 would be bullish, and then we'll be looking for a run up here to EMA 8 at 43.98, basically $44. Now, if it fails to get above 42.60 or if it drops below 42.18, if it fails to hold that 42 support level and drops below, if there's a close below, that's going to be a major red flag signaling the bears are still in control. And there could be a retest of the recent lows and a retest of that 38 level. So keep that in mind. Okay, so yeah, so we're looking to see if it can break above resistance. Now take a look at Nugget. Okay, NUGT. This is the Drixon Daily Gold Miners Index Bull 3 times, and so this is heating up right now. It's got above 30 on RSI and above 20 on Fasto after being oversold on both levels. Look at the bounce on plus DI, and you've got the pullback on minus DI. This is a signal that it's bouncing. Notice the big drop. I mean, it was up here at 38, and then the big pullback. You had dust was in play, DUST, while this was dust was going up, the Nugget was dropping, and so it dropped all the way down. Notice the close below EMA 4 on this day, on the 29th. It didn't close above the pink line until today. This is the first close above the pink line. So as long as that $25 level holds, it's going to signal upside potential, and we're looking at 26.50 as the next level to break, that EMA 8 level. If it can get above 26.50, then that would be a signal that the bulls are really heating up. If it fails to get above 26.50, that could be the signal at the top of the run, or if it drops below 25, that'll be a major red flag. The thing to keep an eye on these ETFs is the big volume at the bottom. Look at the big volume spike and then the lower wick on Friday's candle. That looked like loading. Traders were loading. Same thing here for SPXL. Look at the long lower wick on Friday's candle and then the large volume bar. It looked like heavy loading, and then now we had the follow through today with the big bounce. And then now let's look at JNUG. Okay, so this is the junior gold miners of bull 3 times, and so and so keep in mind that the 3 times, that they're going to be more volatile, and so you could get that could work in your favor to the upside, but it could also work against you to the downside. And so as you can see, this had a really big drop from 20.50 all the way down below 11.50 at the bottom, and then once again, notice the volume bar on Friday for all these ETFs was larger than any of the preceding volume bars, and they formed the long lower wicks on the Friday's candle, and so that's a signal of loading. Keep in mind the big players load at the bottom and they sell at the top, and so it looks like that there were a lot of people were trying to time the bottom on Friday, and they were rewarded today with the big move. And so here for JNUG, it closed above EMA 4 at 13.27. For the first time since the pullback below that level. Basically, it actually actually this got below the level here, before the 29th. You can see that this candle here closed below the pink line, and there hadn't been a close above until this day, okay, until today. And so that's always the first step. Now, if it drops below that 1327 level, that's going to signal it's not ready to go. It needs to break above 14. 14 is the big level. A close above 14 would signal that it wants to head higher. Notice the 8, 13, and 5 is pinched. You want to see a crossover there. Notice also that this is looking like a double bottom support level. And so, this is a crucial level on the charts. It came down here, formed a double bottom with December. And so, it really needs to hold the 1225 support zone. Okay, take a look at FAS. Okay, this is the financial bull 3 times. And so, yeah, it had the big pullback. It went from 83 up here, and it pulled all the way down to 57. Now you could see here with FAS, people were trying to time the bounce before, it got down to the low. And that does happen, and it happened with other stocks as well. This ETF here, once again on Friday though, there was a large lower wick. I mean, look at the doji that formed. This is low of day, and then this is the close. So what this is telling you that the open was the same level as the close here on this day, and so the bears were able to drive it all the way down to 57, but the bulls were so strong that they were able to close it all the way up at 63. And at the same level in the day, even though there was all this movement, FAS on Friday closed at the same level as it's open, and this formed, this is the bullish Haremy cross reversal pattern. Anytime you see a doji in a downtrend, that is a signal to keep an eye out for it. Bounce. That's a bounce candle, and then the long lower wick shows loading. And so yeah, so we're going to keep an eye on it here. Once again, it got above EMA4, the pink line. If it could stay above that level, and it actually did close above the 100-day simple moving average, that was a big move above 64.92. So basically you want to see it stay above 65. Above 65 will be bullish, and then you're looking at the next level is EMA 8 at 67.54. Okay, let's look at EDC. So the United States markets have been under pressure. Well, emerging markets have been under pressure as well, and this is emerging market bull 3 times. And so this, people were really hot and heavy on emerging markets. It was the big thing at the start of the year. You can see it ran from 130 all the way up here to this close to 168 level, and then bam, they drove it all the way down to this 107, 108 level, and it hit that 200-day simple moving average and bounced right off of it. You notice the long lower wick on Friday. Notice Friday's volume bar was larger than the preceding volume bars. They were trying to time it again here, and it pulled back further. I think a lot of people were looking for the bounce, last week off of the 50 and 100-day simple moving averages on a lot of charts that broke, and the 200-day simple moving average was tested. A lot of support levels broke last week that typically would have held in a normal environment. It was unusual to have such a big pullback without any type of major correction. Anytime candles are forming below EMA4 resistance, that's a signal the bears are in control, and you want to be either short or on the sidelines until that level breaks, or you're trying to time the bounce. If you're timing the bounce, you're playing it back up to that level, and then it needs to break that level and close above to signal it wants to head higher. And that is what happened today for EDC. But it closed above EMA4 for the first time since it turned into resistance back here on the 29th of January. And so this is looking like it's trying to create a bullish change in trend. But unlike FAS, it's hitting that 100-day simple moving average at 123. And so if it can close above 123, that would be bullish, and you're looking for a run up there to 128, EMA 8. It has the 50-day simple moving average at 131 as well to break. Okay, so check out China. So China bull 3 times, YINN. Okay, so this is heating up as well. It's not doing as good as emerging markets. So the China bull is not doing as good. It had the big pullback from 54 all the way down to this 30 level. It bounced right off the 200-day simple moving average, just like the other charts that we were looking at. But this is still below EMA4. It still has some work to do. The candles worked back into the bands after Friday's candle, real candle body, and actually entire candle forming below the lower Bollinger Band. When that happens, many times the candles will work back into the bands. Now this chart really isn't going to heat up until it's above this 35.60 level, above that 100-day simple moving average. That would be your signal that the reversal is happening. It's still clear that the bears are in control control, but keep an eye on it for a break above that 3560 level. Okay, take a look at LABU. This is the S&P Biotech Bull 3 times, and so it did close up 6.5% today. It had the pullback from this 117 level on the 29th. It came down, it bounced off the 200-day simple moving average, and then today it did close above several key resistance levels. This was the close on Friday at 80, the bottom of this black candle, and notice the long lower wick, and then notice Friday's volume bar was larger than all the preceding volume bars, so there was heavy loading on Friday, and then today there was a close above EMA 4, and so it's trying to get back above that level. It tried to get above that level last week. If it can turn that level into support, and it also got above the 100 and 50-day simple moving averages, so it closed above 3 key levels today. Now it's 88.50, and then the EMA 13 at 91. Those are the next 2 key levels. So we're going to see if it can go from 85 up here to 91 to head back up. It did that on the previous bounce. It has to follow through here. Yeah, we're gonna see if Tuesday, are the markets going to follow through and have another green day, 3 green days in a row, or is Tuesday going to be a red day, kind of the inverse of what happens when we had when you have a red day on Friday and Monday. When they're down, going into a Friday, usually there's not a bounce on Monday. It usually happens on Tuesday. So you're up on a Friday, you're up on a Monday. Could be a little cool down tomorrow on a Tuesday. We'll see. It would be really bullish if the markets are strong again tomorrow. That would be a major sign the bulls are back out in force. Okay, let's look at TECL. This is the technology bull 3 times, closed up 5.5% today, and so it pulled down. If the FANG stocks are going to reverse, and Netflix and Apple and Google and all those are doing well, the TECL will be doing well. It will be doing good as well. And so here it is bouncing off of the 200-day simple moving average. This is a thinly traded ETF. It got back above EMA 4 for the first time, since the pullback, and then it's back above the 100-day simple moving average. So yeah, keep an eye on it for a break above 115 resistance. If you can get above 115, 120 is the next key level to break that 50-day simple moving average. So yeah, we'll see if that can heat up. And then take a look at ERX. This is the energy bull 3 times. So oil has been under big pressure. This did close up 5% today. RSI did close back above 30 after being below. Fasto's right at 20. This is still in a very strong downtrend. Okay, so the bears are still in full control. It closed below EMA 4 today after breaking intraday, and it also hit that 200-day simple moving average at 28.85. And so those are 2 key levels to break. It has to close above the pink line and then above that red line, the 200-day simple moving average, to signal that the reversal is starting. You can see on Friday people tried to time the bounce. You had the long lower wick, but oil, this is the energy bull. The oil's under big pressure. It has to you're going to have to see a reversal probably in oil before this really gets a good reversal going, and it's below all the moving averages right now. So this is very oversold levels, and so if it can get above 28.30 and then basically 29, if you see ERX above 29, that would be really bullish. Could see a run back up there to 31. As long as candles are forming below the pink line, it is a risk to hold. Okay, look at GASL. This is the gas related bull, and it did break above the 3 times. It broke above RSI at 30. It has the same chart setup. It's forming candles below EMA 4 resistance. It had the load here on Friday. It has to close above EMA 4 at 18 to get that reversal going. Okay, so it hit that level today. We'll keep an eye on it, see if it can break resistance. And then GUSH. Okay, this is GUSH here. It's the bull 3 times. And so yeah, as you can see here, it pulled down as well, and then it's hitting that EMA 4 as well. And so once it gets a close above EMA 4 at 2083, that's going to be your signal. Okay, this is finally heating up, and that's when we'll be talking about that $23 level. Failed to get above that level, and it will be a risk to hold. As you can see, people were trying to time the bounce here on Friday. There was a big drop off in volume today. Yeah. So keep an eye on these 3 times ETFs. Keep an eye on the ETFs are a way to play. These do many of them do trade options. You can look up here at the top of the chart, and it'll tell you whether or not they do trade options, and that is a way that you can get more bang for your buck if you're on the right side of the trade. Okay, thank you very much. Please check us out at our chat. I'll post the link below the video. Thank you.